cash crisis worse. Talking about Venezuela once again.
To make important things. They removed the 1,000 they're called monetary impairment. Hey there, hope all is well. Checking in with you for a little midday RTD news update, and wanted to share with you an interesting story that I just came across that I thought was worth bringing to your attention because it piggybacks on the discussion we had the other day in relation to the current state of the housing market, whether it be from owning a home or renting. We're entering to some extremely concerning times. But then again, we have a commercial bank, Bank of America, looking to extend basically no down payment, no credit score, no nothing. Don't bring nothing to the table. Mortgages at a time where the housing market is about to go through an extreme correction, which ultimately plays into entrapping more people in this debt cycle as possibly the last hoorah before this thing goes belly up. But I want to share my thoughts as well as just basically point to how, at this current moment, due to the overvaluation of the housing market in a lot of, especially in a lot of urban areas, especially within the city of Detroit in particular, it's just a bad way to further entrap people with debt. But I'll share my thoughts on that. Anyway, welcome to this live stream. Won't be long. Just want to check in with you, share a couple headlines, and go from there. But hope everyone's doing well. Any first-time viewers, definitely let me know where you're watching from in the comment section. Or if you're watching the replay, definitely let me know what's on your radar in the comment section. And then, of course, tune in later on tonight for the RTD Live Talk, where you get a chance to call in and let your voice be heard. And before I move forward, just let me do a little maintenance on my side here. Make sure I cover all my grounds. And if you have not already, definitely hit the subscribe button. Hopefully you are notified, as well as click that bell notification when we go live so everyone can have a chance to check in real time. And if you have not already, definitely I want to encourage you to connect with RTD on all the social media platforms so you can stay plugged in as well as interact with the community throughout the day. I tend to share articles throughout the day on Telegram, so make sure you guys check in there so you'll always be plugged in. All right. As also for those who might be new, perhaps, link beneath this description here, just to get you caught up on the speed of everything that happens with this channel here. And for those that are new, definitely the Bullion Max opportunity, end of the month, great opportunity. Silver prices down. Never been a better opportunity to buy something that's of extreme value at a much cheaper paper price. So if you're interested, definitely take advantage of this silver starter kit offered by Bullion Max. Definitely a great opportunity there. Also, make sure you guys join me on rtdlocals.com. Just in case we're disconnected here, I'll be streaming over there full-time at some point in the future. So we'll still be able to connect as a community. And if you are interested in supporting the channel, feel free to do so. Any help is appreciated. And, of course, just go through. You see all the other detailed information there that'll help you get plugged in as to what's going on. So that's kind of where we're at. But let me check into the chat real quick, acknowledge a couple people, then we'll keep it moving. TB checking in. We have Alan checking in from Louisiana, looks like. Grow Mechanic. Appreciate you, man. Chris checking in as well. Brother True Be Told. Appreciate you, man. All right. So definitely lots of things unfolding. It's midday, so there's never a dull moment. But I want to, before I move forward, just highlight, basically piggybacking on a conversation the other day in reference to the America on the verge of a house price collapse. And so I wanted to highlight this article here because it has a lot to do with what's happening in the Metro Detroit area, as well as a lot of other urban areas where they're specifically targeting minorities, whether it be blacks, Hispanics, at basically allowing them to have a piece of, I guess, the American dream before it completely comes to an end by letting people walk into a house disguised as ownership without having put anything down, and then basically put them in a situation where it's a reason why they more than likely can't obtain a house now. But then again, it's a way of trying to cover up the renters crisis as well as the current deflating of the housing bubble. And so they'll probably try to use this as a narrative to try to help people out. That's the way they're disguising it. But ultimately, they're further enslaving people into debt. Because especially here in Detroit, as I was talking about the other day, housing prices are being adjusted downward. And depending on what area within the city of Detroit, the house you might have interest in, A, the environment may not be a safe environment. And two, on top of that, it's already overvalued. So it's guaranteed to correct. And people will definitely be underwater in a shorter period of time. And if they can't afford all the metrics for home ownership now, then what will make people think they'll be able to maintain that home without walking away from it, causing even more issues? So it's just a doom loop repeating itself, but it's interesting how they're targeting, people of color as their primary victims this go round. And I think this might be the last hurrah. But before I move forward, just let me lay a little bit of a backdrop in reference to some other updated articles that might be relevant to get to the main thesis of this article out of Detroit Cranes. But real quick here, I'll go through some headlines, won't dive much deeper, but this is fresh off the press. It says, it's not the 2008 foreclosure crisis, but a dark future is brewing for the housing market. Fewer new homes built and even higher prices. And so, of course, that depends on what market you're currently looking at. But from the article I did the other day, all the the Charlottes, the Detroits, and Grand Rapids, and all those other areas, they're already experiencing a repricing. So that doesn't apply to there. And also, here's another interesting headline. It says rent assistance deadline rapidly approaching. And so this is an urban area within Oklahoma, which is of concern because if people are needing help with paying rent on top of all the other issues with just supplying their needs as food and all the other bills that come with life, what will make people think they can actually maintain a mortgage at any amount? And so here's the article I talked about the other day. 3.8 million renters will likely be evicted in the next 2 months, and why the rental crisis keeps getting worse. And so as they are shifting people from renting and trying to give them hope in regards to being able to own their own home, here they are trying to give these mortgages. At the same time, mortgage rates jump higher as home prices moderate. So ultimately, it says mortgage rates rebounded higher this week, continuing a months-long trend of volatility in the lending market, according to Freddie Mac. It says a 30-year fixed rate rose to 5.5%, up significantly from 5.13 a week ago and 2.87 a year ago. So as the Federal Reserve is tightening, borrowing costs become more expensive, and they're trying to basically alleviate the concerns that people have with buying at this current environment, just because it's common knowledge that you'll hold off and hopefully things cool off. But then again, that can create a systemic event that they're trying to avoid. So no surprise whatsoever. And just to talk about some more stats and facts, U.S. mortgage applications dropped to the lowest level since 1997, and the Fed still hasn't unwound its enormous balance sheet. And so here is an interesting graph here that just shows you how extreme things are. And so here's a line right here referring to the NBA U.S. Market Index Association, which is basically continuing to trend downwards. Ultimately, it's basically saying the applications are not there. People are not applying for these mortgages just due to the uncertainty as well as the volatility and economic conditions tightening for a lot of people financially speaking. And that's just the real talk. So how did we get to the point where Bank of America is looking to test no down payment mortgage in Detroit as well as a couple other cities? But this is from Cranes Detroit, and that's why it caught my attention just because we were talking about this the other day. And so just give an idea what's going on here. I highlighted a couple of things, and I'll share my 2 cents on it. I'm curious to get yours as well. But let me zoom in some so you guys can see what's going on. It says Bank of America started a trial program aimed at helping first-time home buyers in Black and Hispanic neighborhoods by offering mortgages that don't require down payments, closing costs, or minimum credit scores, all considered long-time obstacles to narrowing the gap between white and minority ownership. So when I first saw this, the first thing that stood out to me was home buyers in Black and Hispanic neighborhoods. And so the first thing that came to my mind was thinking about the inner city of Detroit and how certain areas within the city of Detroit are not places where you would even want to purchase a home as your primary residence, just because of the hollowing out of the Metro Detroit area to the point where there's not much life there. Nevertheless, infrastructure around as far as, grocery stores in general, or people who are, how would I say this? People who are working towards providing themselves a better future. And so you're going to offer people within those same neighborhoods, as well as probably, the outskirts. We'll see. It's not clearly defined here, but you're going to be offering those people mortgages in housing that's already overvalued, or in a neighborhood that is not even worth the headache of even living in, which is a problem in of itself. But I'll keep moving. Let me move in some. It says customers using the program will be evaluated for a home loan, not by credit scores, but rather factors such as their history of making rent, utility payments, your cell phone bill ultimately, and auto insurance payments on time. So those 1, 2, 3, 4 criteria there will be one of the deciding factors as to whether or not they'll give you a loan for a home inside of an urban area that is already probably hollowed out and the home prices are already overvalued and doomed and bound for correction within the next several months. This is set up. It says here the program will be tested in certain predominantly Black and Hispanic areas of Detroit, Dallas, Los Angeles, Miami, and Charlotte. And speaking of Charlotte, we just touched on that the other day as to how Moody's economist says Charlotte homes are already overvalued by 44%. So could you imagine getting a loan? And of course, there's more restrictions to the loans, but as of now, because the details are not fully out, there's no minimum and there's no maximum. So you're giving somebody who can't afford a home already basically an open line of credit to go out and buy a house in an area that's already overvalued and bound to correct. And that right there is a setup for ultimately when something hits the fan or their economic conditions deteriorate more likely they're going to walk away from that property and they're still going to be, caught up and stuck with that debt. At the same time, ain't no telling what the actual percentage rate for that mortgage might end up being just because the criteria has been waived for lowering, the amount of your borrowing rate. Anyway, real quick, it says here, in the wake of George Floyd's murder in 2020, banks and other corporations vowed to help more to fight racial inequalities. So basically, extending debt to people who can't afford the debt is a way of providing racial equality. Yeah, but we know the system is debt based. It says with no down payment mortgages, potentially make it easier for lower income borrowers to buy homes. They're not without risk. If the housing market were to slump, homeowners would, without a significant amount of equity, may have little incentive to keep paying their mortgages, hurting their credit scores and sticking lenders with foreclosed homes. So think about this. You go into the game with nothing and the house is already overvalued, it is guaranteed to correct. You'll have no equity. You will not make any type of payment whatsoever on top of whatever that monthly payment might end up being, which will, of course, be something in the form of it not being cheap, especially depending on the amount of money they're willing to give you. But it says here, under the Bank of America program, the lender is giving home buyers down payment grants of $10,000 to $15,000 so they have immediate equity in their home. So that's the incentive. We'll give that to you. But it says the Bank of America offers require borrowers to have a certification from the U.S. Department of Housing and Urban Development. So ultimately Section 8 qualifications and counseling to qualify. And one of the persons who's speaking on behalf of this says, we will qualify all applicants to confirm they have demonstrated an ability to repay. What we don't want to do is with this program is to replace people in homes they cannot afford. It says there's no minimum or maximum loan size under the new offering. So you can place a person inside of a home that's $1 million home, perhaps, and they've already basically shown that their credit is primarily the reason why they're probably not able to own a home on top of the cost of walking into that home. And you expect them to actually make payments and everything to move forward hunky-dory without there being hiccups. It won't happen. It's a debt trap. But then again, in this current environment where out of sheer desperation of keeping the narrative going that everything is stable or we can maintain this without outright crash and burn scenario, expect more of these predatory lending style opportunities targeting the less fortunate to pop up on top of all the other scams and things of that nature that I'm not even aware of. But don't be surprised if more people within the urban areas that were mentioned decide to take out more of a house they can afford. And of course, because there's no stipulations to this, it's probable that the same people who qualify for Section 8 housing, if they have a decent history of making a cell phone payment, car payment, stuff like that, they might end up getting approved for a house next door to you at some point. And so that's one of those things where it just keeps the market floating for now, but it's a debt trap and it enslaves people even more so. And it's sad to see this, but desperate times, I guess, lead to desperate measures on the banking process just because we're witnessing the Vanguards, the Black Rocks, and all those major hedge funds players get in and buy up entire communities, and they're unloading those things now. And so ultimately the banks, it looks like they might try to get in and be landlords as well by giving people mortgages they can't afford. So this is just something that crossed my radar, but it plays into the current housing debacle that's underway. And I'm seeing more and more articles talk about, and this of course is mainstream, so these are mainstream economists, but they're saying that, in 2023 will be the time frame where there will be a housing crisis. So they've already determined the time frame rather than saying that any minute now. And they love using a narrative when the recession starts. And we all know we're in one. We're just waiting on the government and the Federal Reserve to officially acknowledge it so that things will then tank. But they can't do that. So we can see a third contraction of GDP on top of the continuation of the inverted yield curve of the 2 and the 10 reaching historical highs, but yet they're not allowed to say recession on national television. But we all know what's going on. Anyway, I just want to check in for a quick minute and share with you some headlines. I'm curious to get your thoughts. Leave a comment, leave a thought. And once again, just something to pay attention to, man, because the narratives will continue to be propagated by the mainstream narrative, and it's all a cover up to keep people from realizing the stuff has already hit the fan, and they're trying to keep the pockets of certain areas of the financial sector together so the entire puzzle don't come apart, exposing the lies, basically hindering their ability to usher in that rebooting of the system without any hiccups. So, man, this is just what it is, man. Anyway, be blessed, be safe. Definitely be back later on for some more news updates. I got a couple other subjects that I might touch on as well. So I want to just be short and concise with these, share my 2 cents, get your take, and move forward. But if you haven't, definitely join the Telegram and connect with us there, share articles, thoughts, ideas there. And other than that, look forward to connecting with you later on today. Peace.
The next recession.
Recession will be a recession.
We're going to hit a recession.
The date of the next recession.
A U.S.-only recession typically lasts 8 to 10 months.
A crash is coming. Now, whether it's 6 months from now, 12 months, 36 months, no one knows.
If you have the right plan to set up, you can make a lot of money from this.